Hey traders, welcome to Charts and Coffee. Hope everyone's having a great morning. We're winding down the month of November. This is coming down to the last handful of days for the month. End of month shenanigans are most definitely in effect. So we want to remember that as we're ending anything, it could be end of a day, a week, a month, a quarter, a year. The psychology of an ending is a very different psychology than that of a beginning. If you have checked out a white paper that was published, it's quite a few years ago now, but it was a study of, it was a very small sample size skewed to the bull run that we had after the financial crisis. So take that within the framework of when the study was done. But the study said that typically the last 3 days are the most intense in terms of redemption. So if you're looking to pay yourself on your investments, you're going to do so within the last three trading days of the month. Of course, that is the window that we're in right now. So folks will pay themselves at the end of the month. Not so surprising, right? But what was interesting is what they found going into the next 2 to 3 days of the new month, especially within the context of the bull run, again, that this test, this study, this white paper was written based upon, reinvestment. So we'll see in the context of an uptrend, folks will say, okay, I'll pay myself at the end of the month, but then you'll also see inflows in the first 2-3 days of the new month. And so I try to keep that in mind. It's not a trade, it's a tendency. I think a lot of times traders want to find correlations or relationships or seasonalities and say, okay, well, if this is what happens, let's just trade it. But remember, we always want to take a look at, and then by the way, that's what I consider the last of the 4 factors of trading. Time, right? Seasonality. Those are the time-based aspects of trading. But the ones that should come first, price, volume, volatility, you put that in combination with the time, you have a complete view of what's happening in any symbol. And in this case, if we have a tendency towards bullishness into December, then I'll think about the element of the window dressing. I'll think about the element of tax loss harvesting. We'll add to that the actual technical setup that might put us in long or short. So put all those things together and remember there are different tendencies around different times of the month. All right, so with all that being said, I've got bonds up on the screen right now. And the reason I've got bonds up on the screen right now is this would be the most, along with the Fed fund futures, would be, for me, the best way to take a look at what's happening with yields, most definitely in front of the 2 big hot zones this week. The 2 big hot zones this week, gang, are Thursdays, 8:30 a.m., so pre-market, PCE release. This is the Fed fund futures inflation gauge. This is what's built into their models. This is what they use when they are speaking about inflation. This is primarily the gauge, the data that they rely on. Okay, we know this. So that means that we're going to be watching that hot zone on Thursday. But what makes this PCE release really interesting is that on Friday, I believe it's 11 a.m. Eastern, we get to hear from Powell. So not very often do we get a major inflation piece of information, in this case, that data, and then hear from Powell, who can speak upon that. So the proximity of those 2 things, the fact that Powell is going to be speaking after, is going to make this end of the week really interesting. There's 2 ways to look at this. There's one is to look at the ZB, long bonds, and even the ZN, the 10-year. Take a look at what's going to happen here. We've got the broken trend. That's what November has given us. We have bullish momentum. That's something else that November has given us. We have not seen bullish momentum. And I'm looking at the very bottom of my chart, those 2 rows of colors. We haven't seen bullish momentum since the 10-year was above the 200 period exponential moving average. We have not seen bullish momentum since then. In fact, most of it was dominated by bearish momentum and then bearish trends. So this is a big deal in terms of this transition. And so if we're going to see a break back above the 111 handle, which is going to be really important for the 10-year, and a break back above, say, the 122 handle on the long bond. This is the path, and it's going to be supported by macroeconomic data like, hey, PCE is showing that inflation is continuing to cool off, and therefore the current expectations via the Fed fund futures and what we're seeing in bonds, treasuries in general, what we're seeing in the euro, right? What we're even seeing in the euro, that these are merited and that rate cuts are a coming. And they are. 1 to 2 rate cuts by July 3-1 is what's priced in so far. A movement higher in the context of an uptrend in the euro, something we haven't seen since mid-July. This is absolutely reflecting weakness in the dollar. Not that, and gang, I hope throughout the year we have squashed, hopefully permanently, the sort of ideas that the equity markets cannot rally with a strong dollar. That's been wrong. That, and I went through a list of these things that I heard a lot this year that I've been hearing throughout my career, which are absolutely without merit and data, that the Russell leads. So I wish someone would tell that to the NASDAQ. The NASDAQ's going to have I wish I had a V8 moment, say, oh my gosh, the Russell leads, then why am I at new highs? Right? So I hope we can finally put to rest the nonsense around the Russell is leading, the nonsense around that yields moving higher kill the equity markets. They do not. That a US dollar that is strong kills the equity markets. It did not. We have to, what I do is I'll take a look at the NASDAQ and say, well, are the pieces of the NASDAQ strong? And we've talked about this for a long time here in the show. Communications and tech have been very, very strong. Consumer discretionary has been a little wobbly, but 2 out of 3 sectors, 2 out of 3 cylinders for this NASDAQ engine firing off will be enough, and it has been enough. And then most recently, we've been talking about how the S&P is going to join the party. It has, and for one very big reason, and that is financials. So when the S&P can fire off on the tech cylinder and the financial cylinder, you can see exactly what's been happening. All right, gang. So that's what I see. That's what we're taking a look at right now as we're going into the last trading month of the year. This is not the time to sort of say, the year's over. No, gang, we have some good trading still ahead. 2024 should be with a more accommodative Federal Reserve with rate cuts coming. The trends that we all know and love are already starting to emerge just in pieces and in certain corners of the broader market. And this is the harbinger, I think, of what's going to be a really good year to come. So I'm very excited. But it's really important to start to understand where the traction is being built now, not presume this is going to be a high tide lifts all markets, a buy everything kind of market. And if we look at the Magnificent Seven, most of the Magnificent Seven's pretty magnificent. Tesla's been the laggard, and it still is. It's probably my least favorite. So if I'm going to set up a buy anywhere, I'm not going to be focusing on Tesla. What about the other 6 magnificent stocks, many of which have straight up gone parabolic? And in a time of window dressing, parabolic markets that look so hot, no money manager is going to want to tell their clients, no, I don't have you invested in Microsoft. Can you imagine? Ain't going to happen. Window dressing. All right. So, all right, let's get to it. First question, and that's just sort of the breakdown of what I've got front of mind. And hopefully that will help make sense of what's going on. These are not terribly complicated markets right now, gang. They really aren't. What's the most challenging about the current environment is the lack of participation from index sector stock. So before, what's that saying? If there are multiple answers, the simplest is probably the most accurate. And, for me, can I look at more esoteric things? I guess I could, but it's amazing if you look at some volume and some volatility and some price, and then look at the psychology that typically envelops December, strength gets stronger and let's focus on the trends. And before I look for chop or underperforming stocks, let's just make sure we're sticking with things that are already strong and that will likely benefit from window dressing. So, all right. With that being said, yeah, I see here. I just want to remind everybody because on December 1, the Black Friday deals will be done. I keep telling everyone, so please, 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 if you've been on the fence about checking out hourly price movement ranges, daily price movement ranges, the Sector Secrets Mastery, the Volume Max Toolkit, or any one of the cool traders, tools, and indicators that we have here at Simpler, use the 30% off. I do the same thing with my subscriptions. In November, I re-up everything. Why not? Right? So if there's something you've been wanting to try out or renew, every dollar that you don't have to spend can go into your trading account. That's the way that I look at it. All right, so let's get to it. Mark has a question here. The sector grid that I show of the top stocks in a sector, do I show the 5 or the daily? So Mark, for the most part, I have all those grids on a daily layout, but there is a way, and the bot during the tech sessions in the Sector Secrets Mastery has shown traders how to change all the different time frames in a flexible grid on Thinkorswim to the same time frame. So you can change those pretty simply. But I do have a 5-minute intraday grid as well, and I have a daily grid. So I have the template set up for both, but for the most part, when I am scanning, the most psychologically significant time frame, not necessarily the one that we're going to trade, but the most psychologically significant one is the daily. People want to know where something closed. So for the most part, I'm going to be looking at daily time frames for my multi-chart for that grid. But I actually have an intraday one for that as well. All right, next up, Matt says, I took a few 183 shares of CSO pre-market. Okay, what's the question here? Will consumer data drag down Dow Jones and NASDAQ today? Matt, I have no idea what's going to happen today. That's the point. We react. If I look at where we are right now, if we look at where we are right now, Matt, if I'm going to look at the structure and you're asking about the Dow, okay, let's take a look at the YM. What kind of mood is the YM in right now? It's neutral, right? It's below the 200 period exponential moving average. That's not to say that it will be here at 9:30, 9:45, 10, 10:15, 10:30. I think there is, and by the way, Matt, I completely appreciate the question. And the reason questions like that continue to be asked is because there are people sitting where I'm sitting right now in front of a mic and camera who will, with clear conscience, answer that question. And I have a real issue with that. Anyone who's going to tell me that something is going to be somewhere in the future, wow, really? I don't know, Matt. I really don't. However, I can tell you that the probability of continuation to the upside is higher if we get through about 35,370 on the YM. I can tell you that the probability of the YM moving higher will also improve if we can get above yesterday's close. And the more that we punch up to higher highs, obviously, momentum traders will find that appealing and typically engage with those. If we have higher lows, that means that when there's profit taking, those higher lows are indicating support. I mean, the real backbone of any move higher are higher lows, not the higher highs, but the higher lows. So if I see those things happening, then maybe. Same thing goes with the NAS. But I really caution everyone, gang, nobody knows what's going to happen. That's the joke. That's the punchline, right? And the joke, I guess. Nobody knows. But if anyone says, well, this is where the markets are going to be at the end of the day, hey, power to them, because pretty sure humans can't tell the future. So I always want to, I know I kind of am saying this a little tongue in cheek, but not really. I take a lot of umbrance to folks sitting here thinking that their secret squiggles and their opinions somehow can tell the future, right? I don't know, my friend, but we know what the cues are going to be, right? That's trading. Trading is the cues. What are the 4 or 5 things that have to happen for me to be able to determine that the directional bias is bullish or bearish and then manage risk? And so I'll always look at the market from that perspective. By the way, that's the only way we can do it. We're counterpunchers in this game. Absolutely counterpunchers in this game. All right. Next up is Microsoft. Microsoft will likely to continue to buoy the NAS. I mean, it's going to help, right? If I think about what the NASDAQ is, look, Apple's got to be a part of this, because if Microsoft is going to remain strong, and let's just presume that it will, that's my thought, right? The probability of window dressing around strong names going into December is historically accurate, right? Usually what happens is tax loss harvesting equates to weakness gets weaker, and that's going to likely be a lot of bond funds and things like the Russell and maybe regional banks. How do we narrow down the probability, right? Without venturing into prediction, right? The discussion Matt and I were just having, yes? So how do we keep with probabilities? We ask ourselves what typically happens and what stocks are showing the characteristics of being primed for that to happen. So Apple, Microsoft, Amazon, my favorites, by the way. You talk about what currently is buoying the NASDAQ and what will likely continue if the probabilities play out. Meta, Amazon, and Microsoft. Those three have absolutely been punching up to higher highs. And unlike Apple, Microsoft's not had the kind of tumble that we saw in October. But the two things I think that are most interesting at the moment is NVIDIA's recovery after a little bit of volatility, right? You can see there from November 2.1 to November 2.4, pretty sharp pullback, still very much within the confines of a mean reversion, still very much operating above and within the daily price movement ranges. But NVIDIA recovering, NVIDIA stabilizing, that's important. And then Tesla getting above the 200. Again, Tesla is the stock I'm least interested in. However, it getting above the 200 brings the magnificent back to magnificent 7. All right. Can we take a look at Boeing for the long term? Well, so for me, Siva, when I think about long term, again, that's a very subjective thing until we agree what long term is, right? So long term to a day trader might be a 1 hour time frame. Long term to a swing trader might be a weekly. So we always have to think in time frame, right? Time frame dictates a time horizon. For me, long term is a weekly time frame, a time horizon of minimally 6 months. And those are definitions that are mine, right? They don't have to be anyone else's. But whenever I'm giving analysis based on long term, it's usually going to gravitate over to the weekly and to possibly 6 months or greater, right? So do I like Boeing for the long term? Not yet. Not yet. It's at least above the 200. It's at least indicating it's above the mean. It's sitting more in a place that it's appealing for a buy. But ultimately, I'd be a little bit more patient on the weekly. Now, if you're looking at the daily time frame, obviously, if that's your bullishness, that's a different conversation. And with that in mind, Boeing has just turned into an uptrend, something we haven't seen since August. All right, Siva. All right, gang, as always, thank you so much for being here for Charts and Coffee. Thank you so much for opening your minds to things that, look, I'm not going to say and sound like a lot of other traders and analysts. I'm going to tell you what I do, what works, and how I run my room. And I think that's all any of us can do on this side of the mic. So thank you as always for opening your mind to sometimes what feels like trading heresy. I love it. Be good to each other. I'll see you tomorrow.